Yes, mortgage rates are rising and things are changing, but in this video, I'm gonna actually show you how you can take advantage of that and make way more money. What's up, fruitful investors, and welcome to another video. Today, I'll be talking about rising mortgage interest rates and how that's gonna affect you as the real estate investor. Now, where I am here in Canada, interest rates are rising quite quickly and they're expected to rise more in the coming months. So how is that gonna affect us? We already know how it's affecting first-time home buyers, where they can no longer afford as much house, so they're being forced to buy less property than they would want, or maybe not a property at all, which I'll talk about how that's very good for us. But in the short term, for us real estate investors, it kind of sucks because it makes it much harder for us to find cash flowing properties. The more expensive our mortgage payments are, and if rents aren't keeping up with that inflation, we are cash flowing less and less. So it's making it much harder, especially where I am in Kitchener-Waterloo, Ontario, Canada, where cash flow is a little tighter because we have much higher quality properties and quality tenants. Cash flow is already a little slim. So this is not helping. So in the short term, this really sucks for us. It makes it a lot harder for us to find good cash flowing properties. However, like I always say, you want to think long term. The mistake the majority of real estate investors make, especially new investors, is focusing solely on cash flow in the short term. They're not thinking long term in terms of, I want a quality property, I want a quality tenant living in that property, and one that I can attract all the time, no matter what the real estate cycle is, because I'm investing in a quality town, etc., etc. You've heard me talk about this probably all the time. You might be getting bored about it. However, it is the fundamentals of investing in real estate. I really believe in boring. I want quality. I want to know I can get a tenant no matter what the real estate market is, no matter what interest rates are doing, up or down. I'm good. My property is going to cash flow the entire time. That's what I focus on. That's what I urge you to focus on as well. So in the short term, it's going to suck for us. Makes it harder to find cash flowing properties. However, what this is doing is making less and less buyers entering the market. We see that now, especially in Canada and where I am. Less and less first-time buyers are buying properties. They're being forced to live with mom and dad a little longer, or better yet, they're forced to rent. And who are they gonna rent from? Me and you. So long-term, you wanna think there's gonna be more renters entering the market in the next 1 to 5 years. As interest rates kind of stay up, more people are gonna be forced to rent. Also, right at the time of making this video, the economy is changing, especially in the US market. For you guys watching who are US citizens, your market is changing quite a bit. It's slowing down. The stock market is doing some funny things. And the Canadian economy usually always mirrors the US economy. So when the US economy hurts and the stock market does some crazy things, we get hit with that as well. So that's the way our economies are tied together. So we can predict and we can see in the near future, we're probably gonna be entering a recession. What happens in a recession normally when it comes to renters? There's more of them. And when there's more renters, what happens to rent prices? They go up. So you can see recessions aren't that bad. Try to say that 3 times fast. Recessions aren't really that bad if you are a long-term real estate investor. People get stuck in the short term. Oh, I can't buy properties, mortgage rates are too high, cash flow is too slim, I'm not gonna invest at all. And then what do people always say when they never buy real estate? I wish I bought real estate back in 2014, back in 2015, back in 2018, they're gonna start saying, right? Don't be that person. Think long term. Buy strategic properties in good areas that cash flow well, that'll attract a great quality tenant, and you will be fine, especially long term. 5 years, 10 years, you're gonna be a millionaire if you buy a couple of properties. That I can almost guarantee you. There has been no investment like real estate that has made more millionaires. There are more millionaires made in real estate investing than any other investment. So think about that. Don't reinvent the wheel. Buy quality, buy boring. Make sure it cash flows, yes, on day one, but think long term. Don't get stuck up in the economic little turmoil that we're seeing now or little things that come up, okay? Right? These are all mortgage influencers. We want to be buying on key drivers, GDP growth, population growth, job growth, etc. These are the things we buy real estate on, not cash flow. We want to buy quality, which leads me into the next point. Here where I am based in the GTA, Kitchener-Waterloo, Ontario, we are seeing a huge amount of immigrants moving into Canada, but specifically in Ontario and in the GTA Golden Horseshoe area. Normally, on average in Canada, we have 200,000 immigrants coming to Canada every single year. And 100,000 of those, 50% of those, come to Ontario, and the majority of those live in the GTA Golden Horseshoe area. So Kitchener-Waterloo is very close to that. We have a lot of immigrants coming to Kitchener-Waterloo. That is the normal statistic. However, what we saw in 2018 and 2017 was double that. 400,000 immigrants came to Canada, 200,000 of those came to Ontario and in the Golden Horseshoe area. So there are more renters having to rent now because of mortgage rules. There are more immigrants coming to live and work in Canada in the Ontario Golden Horseshoe area, Kitchener-Waterloo. It's just driving awesome returns for real estate investors if you're thinking long term. Remember, a lot of people aren't seeing this. They're reading the Toronto Star, they're reading the Post and Mail, all the newspapers that are saying, you know, the economy's changing, mortgage rules are tightening, everybody's backing out of the market because they're not strategic. They're not thinking long term. If you look at the trends and what's happening, there's a big need for rental houses in Ontario, and especially the GTA, Kitchener-Waterloo area. There are more people who need to rent, more people moving in, and not enough investors to fill that need. So fill the need. Be a real estate investor. Do whatever you have to do to get into a quality market. Oh, but Matt, Kitchener-Waterloo is too expensive. The GTA is too expensive to invest. I'm not gonna invest. I'm gonna go down to rinky-dink town, Ontario, because it's cheap. Believe me, 5 years from now, you're gonna kick yourself in the ass when my partners and I are buying these solid properties in Kitchener that, yes, they only cash flow 100, 200 bucks a month, right? Stupid us. However, I never have to deal really with tenant issues because I have great quality tenants. I'm buying in an area where people have jobs. There's a lot of jobs in Kitchener-Waterloo. There's really no excuse for people not to work, okay? Rent prices are going up because it's so competitive to live in Kitchener-Waterloo. The rents keep going up. So in 5 years, when my property appreciates very well because I live in a quality area and I'm buying in a quality area, we're gonna make more than the investor buying in rinky-dink country town, Ontario, where the cash flow is maybe $1,000 a month, but the property prices are flat. They're not moving up. You make the majority of your money on appreciation and mortgage pay down. Now, we don't want to buy solely based on appreciation because that's speculation. We want to buy on economic fundamentals, job growth, GDP growth, population growth, you know, solid rental demand. The appreciation is just the cherry on top. However, if you're buying in a quality area, you're going to reap the rewards of a lot of appreciation and solid mortgage pay down, i.e. a quality tenant who pays rent on time. So that's what's going on right now in the market, and especially here in Canada with higher mortgage rates. A lot of people are panicking and freaking out, thinking real estate investing is over. I see it as it's just beginning. And if you think with that mentality, then you think long term, you think of all the opportunities as more people, more investors leave the market. Thank you. Leave the market. More for us. I'll take on the burden of maybe less cash flow, but I'm gonna have that property rented all the time with quality tenants. So that's the video. I hope you learned anything. If you did, please like this video below. It goes a long way to helping these videos get more views so I can help more people like you learn about real estate investing. If you want to get some of my free books and my courses and my joint venture attraction e-course to find out how you can also attract joint venture partners through online marketing and branding, you can get all of that at my store right below. Go to my Teachable, get some free books, get some paid courses, get all of the knowledge. I'm giving you a ton of value in that. If you want to find out how you can partner with me one-on-one, you can also find out by clicking here. I'll see you in the next video.